Hey traders, welcome to another episode of Charts and Coffee. Happy Tuesday, everybody. Hope everyone's doing well. All right, so we've got, as far as I'm concerned, we've got the first sort of real week that we're trading. And Mondays typically are not bad days to trade. They're my second least favorite after Friday. So all that being said, I'm pretty stoked about today's trading day. We got a lot on the radar, from oversold levels in gold to oversold / very dramatic pullbacks in silver. Really interesting move yesterday in copper. Those of you that keep up with the free videos that I put out on the Simpler Trading YouTube channel will know that we've talked about copper, silver, and gold for quite a few free videos, and we finally got that pullback that we've been wanting, and I'm very excited about the direction in copper after that move, which is back to its upward movement. Copper is very much sympathetic with the movement in the equity markets. We're actually seeing some stabilization in silver, and so this is the movement. Now we're starting to move a little bit more predictable. We were seeing 1.5, 2 times the daily price movement range, historical volatilities, and now things seem to be sort of behaving back in their sort of normal operating range, which I'm very, very happy about. So good morning to everybody. Good to have you all here. Okay, so let's see here. Let's see, Larry. Hey there, Larry. How are you? As a graduate of the Ultimate Day Trading course, that was a monster brain dump 6-hour course. Thank you, Larry, for being a part of it. It was epic for sure. I'm still trying to understand the V score and how to use it. In a free video, I hinted at it. Yeah. So in that class, one of the things that I had discussed was, where to anchor it, Larry, how and where to anchor that particular tool, and the range lows. And actually, wasn't a hint at all. I flat out explained how to use it. So there's no fluff. This is a fluff-free zone. In those free videos, I basically mentioned anchor the V score to 7 a.m. and look for those range extreme lows. That's its job, right? It's not a standalone, necessarily follow it blindly, although in the right environment you could. And that was one of the things. Well, I'll give you another little hint, if you will, Larry. Take a look at where we are with the lows today. I mean, as soon as I log in to the Simpler Futures room, the first thing we start to do is look at those range extremes and start to determine where and when we could be buyers of the market. Gang, remember, the path of least resistance continues to be to the upside. Yes, there might be few and far between different shorts that we might see. And Alexa's rather loud here. Hang on. Let's turn her down. All right. So there might be few and far between some different opportunities to get short, but I pass on those except for when we have gap psychology in play. And even then, I'm pretty choosy, very discerning about that environment too. On the right, you'll see today, so far, we've got an inside range. The market has pulled back yesterday, a little pause here today, and we have an inside range so far, very early in the day, that's forming. So that's a good pause. It's not a reversal signal, although I think it makes a lot of sense to not be scared, but to be opportunistic about what would happen if we pull back to the 34 EMA wave. That's my retracement. For me, that's my reversion to a mean. That's where I believe we're going to see the best dynamic support within the context of a trend. So anyway, lots of interesting things happening on the day trading front. And to your point, I think right now, there's probably, I'm trying to think of all the uptrends that we've got. I mean, the bullish bias aside, be a long day trader, but the bullish bias aside, we have a lot of long end of day trades too, which is really what we're focusing on, the sector secrets. Hey there, Paul, for sector secrets. So, hey gang, let me mention something. If you have a question about the sector secrets, ask in the Sector Secrets Mastery Room. I'm in there almost all day from about 9 to 4. So if you have a question about that, we're not going to address those heavily here in Charts and Coffee, but certainly we have an entire membership in a room, our clubhouse, if you will. Feel free to ask, but sure, we talked a little bit about silver, so I'm happy to lightly touch on this. Do I have a target on SI? I do. It's going to be the point of control, most likely, Paul. Probably looking at the point of control somewhere just in front of 27. And when I am going to look for that target, I'll make sure that I alert that out to you all, what our target is, and then eventually what I'm going to be bidding to step out in front of likely the size that we'll see at 27 and at that point of control. And by the way, the point of control that I'm referring to is the most volume that we've seen thus far in the month of January. All right, so thanks for that. Next up is, as far as, let's see, hang on one sec here. We've got a question about minor lows and minor highs, or an inside day. Skylar, it's a chart pattern. So a minor low is a slightly lower low than the previous session, and it will have a lower low in the session that comes after it. And an inside day is pretty literal. Actually, you can see a minor low forming on silver right now. Let me show you what I mean by that. These are classic patterns that sadly are not discussed enough in the market. I mean, I sound like a salty old dog saying back in my day, but yeah, kind of back in my day. A lot of you probably feel that when you look at the markets. Here's your higher low right there. Here's a higher low for now right here, and here's your lower low. This right here is a minor low on silver. And I mentioned the inside day on the ES. The inside day, minor low is a little bit lingo-y, right? But inside day is quite literal. It's a session that has a lower low than the previous session. And it's a session that has a higher, a lower high. In other words, it's trading inside the previous range. That's probably the best way to put it. So it has a lower high and a higher low. In other words, it's trading inside the session that preceded it. That's it. It's literally inside that session that came before. All right. Thanks for the question, Skylar. All right. Next up is, can we take a look at Uber and Match? Sure. All right. So I will tell you, when it comes to Uber, and I know this is not an either or question, but one of the questions that precedes every trade I put on is, well, why am I trading this particular symbol, right? And I had my eye on Lyft. Lyft was actually on my planner yesterday, and so I'm always looking at the market structure. Lyft pull back, double green. Uber's a double green too. They're going to be traded the same way. Wait for a pullback, preferably into the wave, and look to get long. And the pullback buys on LYFT and on UBER are absolutely valid. All right, so MTCH, same thing. So great questions, Pablo. All double greens. I love it. That's the structure that you're going to find is absolutely going to be the conducive to the largest group of people for profitable setups, as long as you're not picking a top or any other such ridiculous thing, which you're not, which I love, Pablo. I'm not looking to pick a top. I'm not trying to set up a short in a double green. I'm not hedging. I'm not doing any of those things. We're traders, right? I didn't wake up and confuse myself with, Bill Ackman this morning. What a shock that would be. So think like traders. Don't let the investing mindset or a hedge fund mindset permeate your plan. It's a completely different plan. So love it. MTCH, pullback buys, Pablo. Great symbols. Great symbols. Thank you. All right. As far as where an edge would be in a market, so what I would say, Rishi, check out the free video over at the Simpler Trading YouTube website, because just the other day I walk through this in detail in gold. So for those of you that may not know how or where to find this, just go to YouTube, all right? Or even better, get on the free Simpler Trading newsletter, because my videos go out there every, there we go. My videos go out there every evening. So this would have been, so actually you can see all the different videos, and right there, Rishi, check out that video right there. We just cut it on the 8th, and I went into a lot of detail specifically on gold, waiting for the lower edge of the range. It's going to answer your question perfectly, so check that out. And if you're not checking out the free videos, they're free. It's a lot of great content. Those free videos gave you a heads up on what I was doing. Gold, crude, silver. They've kept your directional bias bullish in the S&P since November 3. A lot of great information in those videos, gang. It's not fluff. Do check them out. And if you want them sent to your inbox or let you know when they're live, just go to simplertrading.com and sign up for the free newsletter. You'll get those free videos every day. All right. So moving on. For whatever reason, gang, and I can't control it from my end, but it looks like there's been some sort of weird delay between my streaming on the software that I'm using, which is Restreamio, and maybe I'll start trying YardStream or something. But yeah, a lot of you have been mentioning that the video going live, there's a weird delay. Sorry, gang, there's nothing I can do about that once I go live. So I'm definitely not ignoring you guys. I just, my hands are sort of tied at that point once we go live. Okay, so next up, what ETFs should you stay away from because of low open interest? Andrew, I would check that. Look, there's thousands of ETFs. So, I can't clearly go through the ones that I would stay away from. It's easier to tell you which ones to keep an eye on. I would typically stick with the Select SPDR list, but you'll notice that XLC, the communications ETF, is rather thin. So what I would recommend is if there's an ETF that's on your radar, just go check on the options chain, because that's a huge list, right? Thousands of ETFs. I could probably sit here for the next 3 days and list the ones you shouldn't trade. So what I would recommend is focus on the ones that do have minimally 500 open interest. I like more than that. Volume, of course, is something that will pick up throughout the trading session, but focus on those XLs, right? If you go to Select SPDR, or no, is it Sector SP? It's Sector SPDR. Sometimes I rename it. Stick with Sector SPDR, not Select. My bad. There we go. Sector, SECTOR, SPDR.com, and kind of stick with these. But these are probably some of your most traded. And then when you head on over to the options chain, you'll notice that some of these are rather illiquid. XLC being one of them. But you'll just have to do that on a case-by-case basis, my friend. Just check on the options chain. Sometimes you'll notice that on the 5s and the 0s, sort of, even though a particular option might be one wide, you'll notice on the 5s and 0s, there's some liquidity. So it really does depend. It really does depend. Hey, there's Scott. Scott mentions, okay, cool. Thank you, Scott. I appreciate that. I've gone through the day trading course or areas of it 5 times. Wow, 5 times. Fantastic. Gosh, thank you for putting in the dedication. Lots of nuggets in there. I sure hope so. That was a full-on brain dump of everything that I do each morning between 9:30 and 11:30. And that's really what that class was about. How can you structure your trading life as a day trader, not to let it consume your day, not to let it consume your life, but focus on the best 2 hours, best 120 minutes of the day. Put on very selective, discerning. Look, gang, there's a lot of day traders out there who put on 6, 8, 10, whatever, a number of trades. I've never found that to be successful. You're going to take a lot of little wins. You're going to take a lot of little losses. That's what I call twitchy trading. What did we do yesterday? One trade. One trade yielded per contract almost $1,000, $960. Okay, one trade. right? A lot of traders day trade, like they love their brokers a little bit too much. They day trade as if they're getting brownie points for putting on 20 trades a day. Good luck to them. I know one gentleman, I know one person, and he's got a chapter written in one of Jack Schwager's books that are sitting on my bookshelf. I haven't had lunch with him in a very long time. Clearly, COVID is probably part and parcel a reason for that. But he's a very, very active trader. Dozens of round turns per day. He is the only human that I know that can trade, that I've seen his trading record. His trading record is public. He was a hedge fund manager. And he's the only guy that I know that can do that. If I tried to do what he did, wow, I'd probably need medical attention. So I don't advise that. I think it's very rare that you find traders that can trade with a lot of frequency. And what's frequency to me? Look, the minute I've got more than 4 to 6 day trades going on in a morning, I know something's pretty active, because if I've done my job right, I know my pitch, right? I already know my strike zone. I know my pitch. It lands in my zone and I hit it. That's it. So really my best day trading days, I'll have 4 trades. One in the Russell, one in the Dow, one in the NASDAQ, one in the S&P at the zones that I'm waiting for. Like a discerning, Hall of Fame bound all-star hitter, all-star batter. Keep a batter's mentality in mind. It's going to serve you really, really well. In fact, some of the best psychology you can adopt is not reading these trading psychology books about probabilities. And yeah, they're great. Don't get me wrong. Annie Duke's one of the best at explaining the game theory behind trading in many ways. But I think the much more easier, accessible, usable psychology is, how do I stand there like a batter and wait for my pitch and don't do anything until that happens? Because then what am I doing? I'm putting the pressure on the pitcher. I'm putting the pressure on the market to strike me out. I'm not going to strike myself out, right? That's the bozo no-no. I hope that makes sense. I hope that resonates. If you're a baseball fan, if you're a sports fan, I think you're already realizing, oh, Rog, that makes a lot of sense, right? Okay. So hang on, gang. Let me scroll down here. Any FX trades? You know, Shane, kind of going back to the free videos, I've had dollar shorts on my watch list for months. It was probably my largest position going into the election, and I'm going to continue to look for dollar short. So the cool thing about the dollar being in play right now is it's accessible to currency share ETF traders via those FX ETFs. It's, of course, accessible to Forex traders, but it's accessible with liquidity to futures traders, the sixes. So dollar shorts, that's number one on my list, and probably some of my my favorite and largest longer term positions at the moment. All right, gang, and just like that, we have. Gosh, we've gone through that 20 minutes. Wow, that's so quick. Overtrading is a trap. It really, really is. It's a dopamine trap. It's something that noobs tend to do unless you're super, super elite. And like I said, I've been at this game for 34 years, met a lot of people, very, very lucky to have met a lot of folks. And like I said, I can count one person I know who can be super, super active. And again, dozens and dozens of round trips. And like I said, when you've got the chapter after Ray Dalio in a Schwager book, you're in some pretty rare air. And that's the only guy that I know who can pull that off. The rest of us mere mortals, we wait for our pitch. All right, gang. Have a great one. I'll see you tomorrow morning. Maybe was this a salty, my regulars here, was this a salty edition of Charts and Coffee? I don't know. Am I salty Raghee this morning? I might be. But I'll always give it to you guys straight, gang. I always will. Have a great one. I'll see you tomorrow, 9 a.m., same channel. All right. Be good to each other. Have a great trading day.